We have given the year beginning growth projections of a minimum of not less than 15% to 20%. We are very confident based on the visibility we have. So there's nothing to worry about it. There are some incremental costs that have happened. Of course, the profitability is less, not only on the less volume but also due to product mix. That is a phenomenon. One quarter it will be much better because value-added products are delivered. And also there is a good increase in the manufacturing expenses, which contributes mainly the environmental angle. The costs have gone up from the zero liquid discharge, and also from the who is taking care of this activity as a third party also increased the prices. And also some cost increases also due to these COVID-related activity, when we have to cut down the number of people so that we have to put more people because of the less number of hours they work, and other people has to be replaced to continue the things. There is cost increases that also happen. Of course, there is some employee cost also increase also. All these led to the reduction in the profitability. But at the end of the day, for the fiscal 21, it will be the top line and bottom line will be certainly will be above 15% to 20% growth. That is based on the visibility I have. I'm telling you about that. The second part I need to bring it up is the CapEx. People are questioning why suddenly so much CapEx and all that stuff and all. And how much additional capacity is going to be created, and what is going to be the revenue that's going to be generated and all that stuff. I was always telling that our capex and capacity of the liters and kiloliters does not give you the endpoint like other pharma companies. So in this new era, unless you improve, you upgrade, you modernize both the facilities and technologies, you will not be sustainable. Not only that, if you want, there are some additional capacity creation is also happening. Before, we have not done this aggressively. As you know, at that time until this March, we are a combined company of Suven Life Sciences and Suven Pharma, where the money that is generated is being used for the R&D purposes. Now that thing is gone and we have no obligation, any things to do with the life sciences for funding. So we have taken up this exercise, and we have taken our board's approval, in principle approval of 600 crores for various reasons like technology absorption and upgradation, and also, as you know, this is a 30-year-old company, more than 30-year-old company, and the facilities like Suven facilities are very old. So we think we should start modernize those facilities. That means modernizing the existing facility will not solve any problem. That means we want to replace a block by block. So we have taken up, we're going to take up one of the things, replace the block. That means it may not give you additional capacity, but at the same time it will give you additional upgradation capabilities and also better technology absorption. So we can use the new equipment, new automation, kind of semi-automation, not full automation. All those things can be brought into the system, and also it can become a FDA approvable facility also eventually. Everything is converted. So this is one of the reasons. And of course, in the Pasha Mailara, we would like to put up one additional block. These are all based on the feelings from the customers and our guess estimates that things will move in the right direction. I cannot wait until the last minute. We need to start this activity. So that's another area where we're going to focus. The third thing is as you know, this R&D set. There are two reasons why we want to take up this activity. As you know, there is a geo that inner ring road things may have to move out. We don't know where, but we don't want to wait until last minute. And also, as you know, last this April, we have some small misfortune in the R&D center where some of the labs are being gutted in the fire accident. So we thought we would like to modernize and also include new technology-based R&D labs also, like high potency and other things that can be coming here. So we want to do this proactively, and we have not earmarked any funds to any amounts to anything. This is just a guess estimate of the number. So we have taken the permissions from the board, which now we'll go to the drawing board and start doing the work. And that's the way it's going to go to the next level. So this is the reason why we have taken up this new exercise. And the only thing is, don't compare us with other generic pharma companies where we keep on talking about the capacity to percentage utilization, asset turnover, all those things which are not applicable to Suven. I think you will appreciate that because the plus 40% EBITDAs are not there. These two things some companies may have, but so this is consistently we are trying to do that. So these are all customer-driven projects, and all in all, the things looking much better than what it is, and now the second quarter, the new projects also started coming in because of the COVID relaxation a little bit. Of course, now again in Europe and America is going up. I don't know what but with the visibility I have for the existing projects and all that stuff, things are looking very good, and we are very confident of achieving whatever we have promised, maybe more. With this, I'll stop at this time. I think I'll take up questions so that we will have much better clarity. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Saravanan from Unifi Capital. Please go ahead.
Yeah, thanks for taking my question. I have a couple of questions. So, in order to meet our yearly guidance, it looks like the second half, the margin profile has to be substantially high. So, I want your comments on that. And you had also told us that the ANDA sales that gets booked in the initial quarters, the profit share typically comes in the later quarters. So, just wanted to reconfirm the understanding. The second one, in terms of capex, you had clearly explained that we cannot look at fixed assets turnover ratio like we look for other pharma companies. But out of the 600 crores, what is towards capacity creation? What is towards upgradation? If you can give a broad split, that will be very useful.
So I think you are asking the same question which I have answered already as the capex is concerned. I said we have taken a principal approval. These are various things which we are going to do, and also said these are not going to be purely capacity expansion. It is also the quality to operations and technology absorption also included there. So I leave it there because there is no question, because we have not yet finalized our process on the numbers where we will go and all that stuff. I think that will explain to you.
So in terms of timelines, sir?
Everything will come in due course of time because day one we have not taken, as I said, we have not finalized our thought process on where it's going or what, and then you are saying timeline. So all these things will come for the next time. Meanwhile, we are working on those things. With respect to the profitability, yes, based on the visibility of the projects and all that stuff, yes, we are certain that the gap will be filled in.
So the increase in freight costs, is it affecting you, sir? We hear that air freight, sea freight costs have gone up substantially. So is that the reason for the lower profitability in Q2?
It's not substantially. It is also a part of the reduction in the profitability, I said. But also it is also a product mix. This time the value-added products are not making. That's what I was telling you. The future orders, based on the visibility we have on the orders we have, the value-added products are coming. That's why the gap will be filled up. Yes, there is an increase because of the COVID-related activity, but not substantial.
Yeah, that's good to know. So one of the things you mentioned was there are 2 specialty chemical projects as well as one ANDA that could be commercialized by Q4. Are the timelines the same?
Yeah, it is on target.
Sorry, sir? I couldn't hear you.
It's on target.
On target. Okay. Thanks a lot, sir. I'll join back next week.
Thanks.
Thank you. Before we take the next question, we'd like to inform participants that in order that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have follow-up questions, we request you to rejoin the queue. We take the next question from the line of Arun from JS Gamma. Please go ahead.
Good afternoon, sir. I would like to know that there were a few media reports which had reported that you are looking for strategic sale of your Suven Pharmaceuticals business. What would you like to say about that? And please clarify upon that. Thanks.
See, these things keep coming whenever we thought of getting some funds into the company. This came 1 year ago, 9 months ago. Every time it comes in. I'm not going to comment on the rumors and nothing happening as of now.
Okay. Thank you, sir.
Thank you. The next question is from the line of Ankush Agarwal from Stallion Asset Management. Please go ahead.
Audible?
Yes, sir.
Yeah. Thank you for taking my question. So first question is on the formulations business. If you can give some stats on our A&D pipeline in terms of how many we have filed, how many are under development, commercial and approved, and also if you can give the royalty figure for this quarter and FY20 as a whole. That was the first question. And secondly, sir, in our latest annual report, there have been 2 qualitative. Hello?
Yeah, tell me.
Yeah, there are 2 qualitative comments that are mentioned. I'll state the same for you. First one is creating a basket of formulations for our CDMO customers, and second was expand customer profile to local markets for multinationals. If you can give some color on what do you mean, what does this statement imply for the future business, that would be all.
In the future business, what I was telling is there is a possibility that we can align with our CDMO partners when the product goes into the generic. We can go to the both API manufacturing for them for certain regions or the global, including the manufacturing the formulations and supply for the certain regions. This is what the opportunity which we are evaluating with the CDMO, the innovators where we are working as a CDMO. That's what it means. With respect to the ANDAs, so far we have 11 filed. So far we have filed 11 and 4 are, one is the old one, Taro, which is now becoming more or less non-event because of the reduction in the sales that is happening. And 2 more are there right now, and 2 more are going to be, launched before the end of the year.
Okay, so 11 filed, 3 are commercial, that is meant, and 2 more you're expecting by end of.
Yeah.
Okay. And so how many are approved out of this 11?
Which one? Out of the 5 only, 5.
Okay, only 5. Okay.
Right.
And if you can give the royalty figure for this quarter in FY20.
This quarter is 2 crores. FY20 only based on the sales right now. I mean, only 2 of these. One of them is small and one of them is okay product. The other 2 we have to see when it's launched. Based on that, right now we cannot give any royalty figure prospectively. Only.
No, I was asking for FY20.
FY20 there is nothing, no. Other than the royalty that's from the
last year.
I know royalty. Other than royalty,
No, it was only 6.4 crore totally for the whole year.
No, but there is any profit share.
No.
There is no profit share.
No profit sharing.
That's what I'm saying. There is no profit share at FY20. It's only royalty on the tariff.
Oh, got it. So just one clarification on the first comment on the formulations for the CDMO customer. Did you mention the comment that once the product goes generic, that is when you're looking for this formulation in API business?
Yes.
Okay. So till the time it is on patent, you're only focusing on the intermediate part, right?
No, I think you need to understand. Not for the same product I'm talking about. They have their own. Okay, I forgot to tell you. It's a life cycle management of my customers. Some of the customers are having products which are not a part of it, and it's already commercial for a long time. And some of them are getting into a generic mode. So now, when they know us long time, now that they know that we have the capability of formulations also, and we have the facilities to manufacturing the API also, and they know our capabilities now. We are pitching with them that we can do the life cycle management by doing both the API and the formulation for them, so that it is cost effective for them instead of them doing themselves, which is a little bit costlier, as you know. So that's what I mean.
Okay, got it. For a separate product line for your existing customers.
Yes. Then an additional will be.
Got it. Thank you, sir.
Right. Thanks.
Thank you. The next question is from the line of Abdul Puranwala from Anand Rathi. Please go ahead.
Yeah, hi, sir. Thank you for taking my questions. My first question is related to the profit share amount what we get from Rising Pharma. So earlier we used to guide that for the full year FY21, this share could be close to 45 to 60 crores. So is that all guidance also maintained for the full year FY21?
No, because as you could see, this all depends on we have seen one quarter before 2 quarters last year, and they thought things will move in the direction, but it's not in the same line. But that is coming in the consolidation. But that profit share is not going to accrue to us. That comes only as a dividend whenever they pay. So when we say profit share, we are talking about the products we sell, not necessarily the Rising for other customers, where we get the profit share into standalone companies. That's what we're talking about. Rising is, it can go if they have one product launched, suddenly there's a good spike in things and the value addition is there, then you have better profit margins and then you get the profit allocation of 25%, whatever the net profit is. But 48 crores what we're talking about based on the first 2 quarters of last year. But it was not to be. Right now, what is it total we have?
It's right now the first 6 months 19 crores.
19 crores. So it's going to be around 40 crores maybe. Put together for 40 years instead of 48 crores. Not much. It can happen also, but...
No, last year 6 months it was 20 crore. Against it is 40 crore.
Right.
But for the full year it was 48 crore.
Right.
We don't know next few quarters how it is going to be.
Right.
Sure, sir. And so my second question is in relation to the clinical project. So until last quarter, we were maintaining that there are some slowdown in the activity of addition the clinical projects which we have seen. So are we now getting some additional queries, or this improved visibility is due to we have some commitment from the customers related to the pickup of...
Not commitment. There are new projects have come in second quarter. I told already in my introductory remarks. And because there is a letter in Europe and America last 3 months. But now we don't know what happens from this quarter onwards. But the second quarter is much better compared to first quarter. We have some projects came in.
Sure, sir. And my final question would be on the other expenses. So I heard you on the opening remarks mentioned that other expenses are going higher because of the environmental expenses and the norms to be maintained. So would we see a similar run rate going ahead for the full year as well?
Yes.
Okay. Sure, sir. That would be all from my end. Thank you.
But profitability, as I was saying, even with this expanded expenses, we're going to maintain it.
Sure, sir. Thank you.
Thank you. The next question is from the line of Rahul Picha from Multi-Act. Please go ahead.
Thank you for taking my question. Sir, on the ANDAs, we have right now 3 molecules under commercial supplies, and if I'm not wrong, we had 2 during Q1. So have we launched 1 during this quarter?
Not yet. This quarter, the next quarter, we will launch hopefully 1 in third quarter, if not certainly in fourth quarter. Two together. 2 will be launched before the end of the year.
Okay. So, sir, of the total 3 that are under commercial supplies right now, 1 is the old one, which is with Taro, and 2 is from the new pipeline. Is that correct?
What's it again?
Total, we have 3 molecules under commercial supplies right now, right?
Yeah.
And of that, 1 is the old molecule, which is with Taro, correct?
Yes,
And 2 belongs to the new pipeline.
The other one is for 2 different customers. The other 2 are for 2 different customers.
Okay. So we had said that formulation sales were 4 crores. And how much was this quarter?
No, you're talking about the formulation sales for this quarter?
Yes.
Yeah, it is about 10.18 crore.
10.18 crores. Okay. And sir, regarding the profit share, has that come in or it is yet to flow in Q3 or Q4?
Partly it includes, but the rest will flow in the following quarters.
Okay. Okay. And sir, the royalty amount that you mentioned a little while back, 2 crores for this quarter, so that would include the profit share amount?
Yes, that 10 crore includes 2 crores.
Yeah.
Okay, so 2 crores is the profit share.
Yeah, out of the 10 crores, 2 crores is the profit share.
Okay. Thank you, sir.
Thank you. The next question is from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Good day, sir, and thanks for taking the question. So first question, sir, in your opening remark, you said that you're maintaining your 15% to 20% or more revenue and profit guidance for the full year. So if I work out the maths for H1, effectively you are saying around a 63% growth for even a 15% revenue growth for the full year in your revenues. And so 60% growth is what you're implying for H2 of this year compared to H2 of last year. So is that the right assumption, sir?
See, I don't compare with any quarter on quarter, okay? I'm talking about year on year.
Yes, sir. For the full year, if we work out the maths, taking into account H1 performance of this year versus H1 of last year, then for the remaining part of H2, over last year's H2 comes out to 60% growth in revenue and 50% growth in PBT. That is what you are implying, sir? 50% growth.
60% growth, which is 60.
See, overall, I think, if you put a Excel, it may give you 100% growth also, okay? That is the Excel sheet. Let us make it very clear, actually. The guidance what was given was, based on the overall performance, we have given a whole year 15 to 20% growth on the top line. That is what is going to be achieved. Next 6 months it is going to be achieved. It is based on the visibility that was we have given the guidance.
Okay, sir. That's what I was trying to clarify. I mean, for the full year, you are saying 15 to 20% growth in revenues and profit before tax.
Compared to last year, yes.
Okay. So that is one, sir. And secondly, sir, this 600 crore capex, which is you are planning. So my question was that, given that we have already embarked on this 320 crore capex, where the fruits of that capex is yet to come to us, so isn't it better to kind of wait for at least this 320 crore to start generating something for us before embarking on another very big capex plan? Because effectively it takes away a very large cash flows, total almost 1,000 crore for a company of your size, sir.
Sitting from that side, you can say whatever you want, but the thing is, as I said earlier, in order to keep on staying in the business, things are changing. You need to upgrade yourself. You need to get the new technologies itself. You cannot sit on a laurels. And you are saying, I told you already, don't compare us with these regular day-to-day generic kind of a thing. We need to do proactively things. We need to plan properly. 600 crores, I'm not going to do it today itself. Okay? It will start and it takes time. It will take 24 to 36 months minimum. Okay, so we need to do proactively. This is a technology upgradation, facilities upgradation, replacement, and R&D, which is a must. And even in R&D, the new technology has to be built in, new equipment has to be brought in. Things are there that has to be done. I think we take that call, and I think we don't expect everybody's wishes. I cannot follow because everybody has a different way of thinking. Why can't you go to the generic way? Then you can do 1,000 crores extra turnover and all that stuff. This is what we do best, and that's what we are trying to do. And what we know, what we are trying to do is we know why we are doing it. It may not be liking to the more of the people who are on the line, but that's the way we're going to do it.
And sir, this given where technology stands and your understanding of the same, our old plant, as you said, some of them were even running for 30 years. So has that useful life now changed? Like this 600 crore capex would be good for how many more years for us? And given how things are changing rapidly, as you mentioned. So what is the sort of life for this new asset as per your best understanding as of now?
I mean, those first buildings will be for 20 to 30 years, right? And 30 years ago, how they are built it, those things. But as far as the equipment inside is concerned, this is normal wear and tear that will be there in a replacement capex. What we are trying to do is in a building by building replacement of the buildings or auto building, and when you take out everything, but all the pipelines will go, they will not be useful, even the equipment not be useful, so you have to replace the new equipment and all that stuff. So it will, the buildings will go for at least 30 years, if not more, because unlike olden days, you don't build with steel structures where they get rusted and those days things are different, and now the requirements are not there. All those things has to be taken care of now. So this is a necessary evil. I think to survive in this business, you need to constantly upgrade. All that upgrade does not really reduce the capacity. That need to be understood.
Understood, sir. And finally, on the employee benefit expense, this quarter, I think it was high. So is it because of addition to our workforce, or we had a salary hike, or any explanation on that point?
It's a combination thereof. A little bit addition. See, what happens is during the COVID time, we cut the number of hours they work. So that means we need to bring in additional number of people. So then all these things, some additional employees have to be brought in, and the same people will be giving less off, and not a continuous work, but the overtime pays. Those things are all involved, and also it also involved the increments that are given during the quarter also. It's a multiple thing.
Thank you. Before we take the next question, a reminder to participants to please limit your questions to 2 per participant. The next question is from the line of Manoj Garg from White Oak Capital. Please go ahead.
Yes. So, very good afternoon, Mr. Jasti, and thank you very much for taking time out and answering the question. Sir, just to understand your perspective, like when we look at other CDMO companies out there, a lot of companies have spoken about increased number of inquiries and good, I would say, order acceleration over the past 3 to 6 months. And while you also highlighted that we have seen some momentum improving in quarter 2 over what we had in quarter 1. But if I would like to just pick your mind that how are you seeing overall response from your customer, and have we been able to add any new customer in our kitty over the last 6 to 8 months? Here?
I mean, the traction, the projects and the products are very good. I mean, visibility is good. And as I said, the second quarter we saw the people came out of the COVID and started doing some projects. And with respect to the customers, we have added only one customer during the last 6 months.
Sure. And so with regard to the pipeline, while I understand the pipeline, the project has a long gestation period, but just seeing between the pipeline movement of the products from preclinical to phase 1 to phase 2 to phase 3, is there anything significantly which you would like to call upon in terms of how the movement of the projects happening between the phases?
Yeah, movement is, as I was telling last time, the movement is good. Otherwise, you will not be able to get the revenue generation. Maybe I told last time that people are concentrating not on too many projects, but whatever the projects they take in, they're prioritizing as a single project, and if it is good in the clinical trial, if they are moving into the next stage. In the good olden days, 5 years ago, they used to have 2 or 3 products in the same category, even though if one product is good at one stage and they may not have prioritized it, and if I happen to be in that thing, it was not, there is not a movement. But now, it's not so. Things are moving very good, and
Sure, that's helpful. And just the last question from my side, sir. Of this new incremental capex which we have outlined, are you also going to add some more capacity on the occupational exposure level for where we had already had one plant which I think is going to be commercialized this year? Are we adding more capacity in around that area?
No, whatever we're going to do in the new pure capacity expansion, that will be taken care of other requirements. We don't need to do the same thing. There may be different requirements. As I said, we are not formalized, not formed our thought process yet, but this is what we need to do for the long gestation. These are all long gestation projects, and we need to do proactively. And we look at our pipeline and the customer requirements. We will also try to include those things, not only in the regulatory compliances, not necessarily for FDA, but it is the customer regulatory compliances, but also technology-based activities. So it's same thing need not be, but it's a multi-purpose block anyway.
Sure. And so, like you also have outlined in your notes that you would also be looking for some technological acquisition or capability enhancement. So, would be great, sir, if you can outline like what are those areas which you are looking forward in terms of.
We're looking many areas, but we have not finalized which one is the first one to go through. So things are going, it's in a thought process. That's what it is. We have taken the provision from the board to have this money to be spent over the years, and also for the purpose how we raise the money, whether it is in-house or some QIP. All those things will be taken care of in the next 3 to 4 months.
Thank you. The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, sir, thanks for the opportunity. Sir, we have been following our company for 5-6 years now, and you have been known to be a very conservative guy over the years. And sir, embarking on this 1,000 crore around 900 crore capex, including the 320 crore which we are currently undertaking, Sir, any thoughts on, whether the capacity expansion part on where we are actually increasing our capacities? Is it that, we have more projects in the pipeline, our existing customers are coming to us with more products? Any thought process on that, sir? And that is why we are embarking on the capacity enhancement as well in this 600 crore capex that we are taking.
See, I think if you are going on the capacity and capacity, from the beginning I was telling this is not a capacity expansion proposal. It also includes capacity expansion, but it includes the modernization and replacement of the old blocks and also the relocation of the R&D center, which is going to be a future problem because we need to move from the inner ring road to outer ring road. So all things included. So it's not purely, maybe only 20-25% only goes to capacity expansion. The rest of them are going to be qualitative in nature, not a quantitative. So without that, sustenance it will be difficult. Who will show up? If you don't upgrade yourself to the modern requirement, keeping it as a 25-year-old, 30-year-old facilities will not be good, and also to put a new technologies that will not fit into that. So all these things have to be taken into consideration. So don't take this as purely the capacity purpose we are doing that. Yes, but whatever the capacity we are doing, that is only with the understanding that projects will move into the next stage and with the good traction that is going on, and we expect that to happen also. But
sure.
Right now, I cannot give you a guarantee that it will happen tomorrow or day after.
Sure, sir. Got it, sir. Sir, on the pharma and agrochem side, any new products that will get commercialized in FY22? Any hope that the pipeline will move from phase 3 to commercial stage on the pharma side, and agrochem? Any more molecules that we have added that we plan to launch in FY22 apart from the earlier plans that we have?
Yeah, in the agrochem, there is one product that will move into the commercialization in the fourth quarter that will come into, so that will really accrue into fiscal 22. Similarly, I've seen one molecule also moving into phase 3, additional molecules that also will give us some dividends in the next 6 months.
Thank you. The next question is from Cinderella Carvalho from Centrum Broking. Please go ahead.
Thanks for the opportunity. Congratulations, sir, for spending your time with us and explaining all the capacities and the R&D investment that you are bringing into the company. So I just wanted a few clarifications from your side that, this quarter that we are seeing, you also highlighted that we have seen some improved demand in terms of new projects, improved project requirements that are coming in. So are we seeing this in this quarter, or it should be more reflected in the second half?
No, we've seen in second quarter itself, and it's continuing as of now. Only thing I said, now that there are going to be a lockdown in both in US and Europe, what will happen to both quarters, we don't know. But as of now, things are moving well compared to the COVID days of the first quarter.
Okay. And so in terms of our specialty chemical area, what number we have guided earlier, we maintain that as well, right?
Yes, ma'am.
Yes. And so just on the R&D side, the capacities that we are bringing in, what are the recent technology-based requirements that you see in our company, which is most required? If you could highlight on that, it would be very helpful.
No, we have not finalized any of the things. This is only expansion. Funding, only the in-principle approval we have taken. As I said earlier, that we are in the process of getting in touch with the customers because we have some thought processes. So which one should be the first one to go into the implementation? We will, in collaboration with our customers, we will prioritize those things. All these things will take another 3 to 4 months. So this is not going to be tomorrow. We're not going to do this tomorrow itself, but it takes another and it will be over a period of 36 months.
That's excellent, sir, and helpful. So we'll get more clarity next quarter or maybe somewhere there to understand where we are going. And sir, in terms of if we want to call out what is the COVID-related expense this quarter, do we want to, and the incremental additional spend, if you would be able to?
We have not taken any separate account of those things because these are all embedded in various aspects, and separating them is difficult, and we're not done any exercise like that.
Thank you. The next question is from the line of Avnish from UR Group. Please go ahead.
Hi, this is Avnish here. Thank you for taking my question. Just have two questions to ask on. Which area of the business is seeing the highest growth in terms of APIs, formulations? And my second question is, there's an increase in current assets and inventories for this quarter. So just want a clarity on this as well.
What is the second one?
No, I didn't get your question clearly.
Hello. I just want to have an idea as to which area of business is seeing the highest growth in terms of APIs and formulations. And second, my second question is, there's an increase in current assets and inventories in this quarter. So just one idea as to what exactly has led to an increase in current assets.
See, when it comes to the current assets, we are talking about the current assets.
Yeah.
Nothing much has moved, right? See, only the inventories have gone up by about 22 crores, whereas the receivables have come down by 11 crores. If you really look at overall, it's a minor moderation. That's what has happened. And when it comes to the, of course, mutual fund investments, there is a growth by almost about 40 crores. That is there actually. And we have a cash. The current assets includes only this part of it.
Like if you compare from 31st of March to 30th of September, the current assets have gone from 5,462 lakh close to 8,800 based on the.
It's gone up by 33 crores.
Yeah, correct. So just that is gone towards investment.
There is a mutual fund that also has gone up by 33 crores, right? Because of profitability.
Got it. Yeah, got it. And second is on the growth of the business, which area has seen the highest traction and growth in terms of business?
It's nothing like a highest thing now. Everything is except the specialty chemical, which is more or less in the same range. Both CRAMS and the formulations will grow in the same range of 15 to 20%.
Okay. And any patents coming out for the APIs as well? Is the company planning to file any patents for new APIs being developed this financial year?
No.
Okay. Thank you.
Thank you. The next question is from the line of Anand Bhavnani from Blend AIF. Please go ahead.
Thank you for the opportunity. I have two questions. Sir, with regards to the commercial CRAMS, I guess in the previous calls you mentioned that one is anti-diabetic, another one is rheumatoid arthritis. So if you can give us some sense of, how you are seeing each of these commercial CRAMS products, which one is scaling up, and which ones do you see that you might not be able to be the best supplier, somebody else is already a high priority supplier. If you can give us some guidance on the already commercialized molecules, how do you expect them shaping up?
As of now, things are looking good, and we expect the growth to continue, but it cannot be on a quarter-on-quarter basis, not even year-on-year basis. Maybe sometimes in 9 months it may be repeat order may come, sometimes it takes 18 months to come in, and we cannot tell how it is behaving based on the sales, then only we get the repeat business. As far as is concerned, we will be not a single source. You were thinking that do we lose anything? No, but as one of the partners, we will be getting our share. It all depends on the market dynamics. But as of now, things are looking good.
This is for all the commercialized products or like particular opportunity in any particular product?
Yeah, they said that these are all across all the things, but at the same time, it may not be at the same time. So that's what it means. That's what I was trying to tell, because repeat of in the same range. As a matter of fact, it's going a little bit better than what was originally there, but it's in the same range. But I don't see any slowdown as of now.
Sure. And so for our specialty product, we see that globally agri prices are up. So do you see, given that our specialty product goes into agrochemicals, do you see that it will be able to have higher growth over the next couple of years, given the agri prices are up? Is there any indication from our customer to kind of ramp up and keep our production capability at the highest levels?
No, as far as production capability is concerned, we will be getting enough in advance notice for us to create another block and all that stuff. That's not a problem. As you know, we have, as I said, 2 more products are under development. One will be commercialized sometime in 21 calendar, 22 fiscal. And the other one will be sometime in 23 and 24 time frame. Things are, with respect to the existing molecules, they are, as I was telling before, they are in the same range. 5% is that way. So more than that, that's what the guidance they are giving to us.
Last thing, sir, with respect to capex, in our previous calls, we used to consistently, check with you as to the outlook for capex, and broadly the sense was we might not need much capex beyond the current 320 crore capex for 22-23. We might not meet it. So suddenly in 2 quarters, your thought process has changed a bit. You now talk about adding technology and refurbishing the plant. So why has there been a sudden change in the thought process to this end?
There is no sudden change. I don't tell what all my thought process, which I don't formalize myself in front to people. And the other gentleman was telling you are so conservative, never spend money anything. So things are different, and spending is different. And now that is a pure play CDMO, there is no problem with respect to the commitment to the other side and all that stuff. And we can expand ourselves and go. So these are all things in mind, but it has to come to a certain time. Then only we can take a decision. And as you know, this is not only CapEx just for the sake of capacity expansion, but this is being a 38-plus-year-old company. Some of the buildings has to be replaced, and when you replace, then you need to do a little bit better layouts and automations, and even including new technological. But bulk of the activity also goes to the relocation of the R&D center itself. And when you do the R&D center rebuilding, then the new technology labs also has to be installed. As I said, this is not a thought process. I will not be able to give you unless myself have a firm thought on it. And these things are all there for a long time, but we have to wait for the opportune time. And I don't have any obligation for anything else, and I don't mind spending money. So that, see, this is a catch-22 situation. You have to have the infrastructure in place in order to do service, but not after getting the project, so you cannot do it. And this is also the requirement. The global customers, especially in the CDMO field, they expect you to, even for the early stage intermediate, to have a FDA-approved kind of a facility. So these things are all taken into consideration, and to sustain in the business model, it's not a thing like a commodity where you can do churn out things. And here it is more of a qualitative in nature, which we need to do it and at an opportune time. And also we see what's happening in the market, and we see the traction that is happening. All these things becomes at some point where we take up these decisions.
Thank you. The next question is from Sachin Kasera from Swan Investment. Please go ahead.
Good afternoon, sir. Just one question on ANDA part of the business, you mentioned that you have filed 11 ANDAs. How many we plan to file in the second half and in FY22, sir?
Another 3 to 4. We try to do it if everything goes well.
And next year, sir?
Our target is about 7 to 8 per year. Because we are very in stage and we're slowly going.
Sure, sir. Secondly, sir, of the existing ongoing capex of 320 crores, how much is now pending capex?
About 75 crores or something like that, which will be spent within the next 4 or 5 months. Because Vizag plant, we are going to start validation this quarter, and the FTC, where the formulation plant is coming, will be done validations sometime in the fourth quarter. With this, the capex will be finished for the existing operations.
And sir, are we getting any good visibility on this 320 crores ongoing capex now that we are almost on the verge of completing it? How are we seeing the visibility for utilization of this 320 crores capex?
See, the thing is, already we started doing things in a pilot plant, and which is not enough for the formulations. That's why it's formulation thing. And with respect to this thing, it is capacity expansion is for multi-products, and we see this FY22, we are seeing that one more project from the specialty chemicals is coming in. We are taking permission from the existing partners to give the new projects in the new facility, so that that will be qualified also. So visibility is good, but you have to be proactive, and you have to build your capacities 24 months ahead of time. As far as I am concerned, my business model is concerned, not. So these are the things which we have done. So things are looking good here.
So we can assume in 24 months we should be able to reach a good utilization. That's a reasonably good estimate.
Not necessarily everything fructifies, but yes.
Thank you. Before we take the next question, a reminder to participants to please limit your questions to 2 per participant. The next question is from the line of Venkat from 3 Sigma Financial. Please go ahead.
Hi. I wanted to ask you only 2 questions, but I think I wanted to escalate that the anchor is not doing a good job by limiting people asking only 2 questions. Yeah? So, sir, I wanted to ask you, first one is, how is the domestic and export mix?
What is that again? I couldn't hear you.
Your voice is not audible properly.
Yeah. So I wanted to ask you, how is the domestic and export mix?
Domestic and export?
Yeah, how is the domestic and export percentages?
No, we are export. Most of our things are export. We have very less domestic.
I see. Okay, fine. So the next question I wanted to say is, I'm just summing up whatever was discussed on this additional capex that we are talking about. Is mostly like replacement cost, improved efficiency, technology upgradation, which will be useful for R&D, and 20% will go for capex improvement. All right, that's a capacity improvement. So is my understanding right, sir?
So what you said in the first is okay, but there is nothing called 20% increase in capacity kind of thing. We didn't say that.
Yeah. So what I'm saying is, I'm just summing up to replacement cost, improved efficiency, technology upgradation for R&D.
Yes, sir, but we have not apportioned the amounts to where goes how much and all what it is, and we'll get back to you after a couple of months.
That's fine, sir. So I wanted to escalate, that the anchor has to limit to only 2 questions, because we have been waiting for so long for questions that are repeated, and people are asking multiple questions. So just respecting others' time is what I wanted to discuss. Thank you.
Thank you.
Thank you. The next question is from the line of Darshit Shah from Nirava Capital. Please go ahead.
Yes, sir. Thanks for taking my questions. Still just want to understand. I understand you stopped giving phase-wise details of the products moving into different clinical trials. Sir, any product in the CDMO pharma space which you think could probably move from phase 3 to commercialization, if at all successful in the next 12 to 24 months?
There is always a possibility. There is a product which I mentioned last time ago, one project in phase 3 which we are supplying. And that may move into 21-22 time, 21 calendar or phase. Similarly, there is another one that just moved into phase 3 that we will be supplying in the next 6 months.
So that's for agrochemical or pharma space?
Pharma.
Pharma. Okay. Thank you, sir, so much.
Thank you. Before we take the next question, we'd like to inform participants to please limit your questions to one per participant. The next question is from the line of Viraj Mehta from Equirus Portfolio Management. Please go ahead.
Yes, sir. All my questions have been answered. Thank you.
Thank you. The next question is from the line of Vivek Gautam from GS Investment. Please go ahead.
Sir, I just wanted to know about the from 3 to 5 years perspective, 2, 3, 5 years perspective, how what's the opportunity size we have, and do we depend on we are enhancing our marketing capabilities to get more business, or is it more word of mouth? And any role model we have like Lonza or Wuxi, can we have something of that, sir? Because we have a 30-year head start also. Thank you.
Yeah, 30-year head start, but we are not in this business all the time this way. And at the same time, I mean, the role models are also there, but our business model is also different. And next 5 years looks good. Otherwise, we will not be doing what we are trying to do in terms of upgradations and the capacity expansions and the technology absorptions and all these things which we are taking, because we see good traction that is happening. And also expansion of business model which we have done. We were not there in the formulations NDAs, and we are doing that. And with the new technologies and upgradation of the facilities and new opportunities will pop up, and that will give us a better traction. And we see very good things. Otherwise, we will not be able to think of spending this kind of money.
Marketing expenses, are we putting in additional, or is it more of additional manpower, and how do we get more business, sir?
Which one is that?
Marketing. Marketing, new sales products, sir.
See, the thing is that, when it comes to Suven, we don't have specific marketing per se. What we have is project management, and we have a team set up in US, where we have project management office where our team, which is more from the technical point of view, talk to the customers who are basically R&D as well as the procurement specialized in R&D. That's what we do. We are not like taking a bag and then going around and marketing ourselves.
So what happens is, these being an R&D projects, the customers would like to have because this is a weekly or bi-weekly teleconferences, and during the daytime, if they have some question on the projects, then they can call the people who are in the US rather than waiting until the next day, because that time we are sleeping. Similarly, now we are thinking of, if the business is growing, we are thinking of putting the same project management team in Europe also. I think that will be done within the next 6 to 12 months.
Thank you. A request to participants to please limit your questions to one per participant. The next question is from the line of Ankush Agarwal from Stallion Asset Management. Please go ahead.
Thank you for taking additional questions, sir. So just one clarification. You just mentioned that total formulation sales was 10 crores. Out of that, 2 crores was royalty. And if I'm right, last few quarters you mentioned that the formulation we give at cost and later on we get royalty out of it. So would this assumption be right, that out of this 10 crores, the 8 crores is what we have given at cost, and this 8 crores will generate royalty for the next quarters coming up?
See, we need to understand that royalty is only from Taro. Okay? The other ANDAs, it is like we sell the product with a margin and we get the profit share. The profit share is realized based on the sales happening at the customer end. If the sales happen the following quarter, we'll claim some profit sharing. If the sale happens the following next few quarters, it will happen that way. As and when the sale realization happens, then the profit sharing happens. So, to make it very clear, the past, I would say, last year it was only, 2.32 crores, what we reported. We are talking about corresponding previous 6 months. It was 2.32 crores of royalty only from Taro. There was no formulation sales. This year, the first 6 months, formulation sales of 18.88 crores, which includes Taro royalties, little bit of profit sharing, and ANDA sales. Hope that is clear.
Thank you. The next question is from the line of Pallavi Deshpande from Samiksha Capital. Please go ahead.
Yes, sir. Thank you for taking my question. This question was with respect to your ANDA. So you mentioned about filing 3 to 4 every year. So in the first half, have we filed any, and else will we be filing all of these in the second half?
Yeah, nothing is filed in first half, and we are expected to file these in second half.
Okay, sir. And secondly, sir, you mentioned about hiring new hires done. So how many employees would have been added?
Oh, in Europe?
Yes, sir.
Yeah, to start with one, and it will be 2 people maximum, not much. Because this is a project management. These are technical people.
Right,
okay.
Right. Thank you.
Thank you. The next question is from the line of Gokul Maheshwari from Auriga Capital. Please go ahead.
Yeah, just a couple of questions. So one is on ANDA. You mentioned that the potential size could be $2 to $4 million for the initial ones, and for the ones which could be filed later on, the potential could be larger. Is that understanding still correct?
Yes, that is what I was thinking, but it all depends. It can be $2 to $4 million is the maximum that can happen, but not all of them will be in that range. Some of them will be less than $1 million also, because the volume of the business is not there, or whatever it may be. So that is our guess estimate, but we have given a guidance of how much this year we have given.
No, ANDA, we said about 2 to 4 million per product, so it's about 4 products maximum.
Yeah, that's in not necessarily every product is in the range, okay, if you want that clarity.
But the later on ones would be higher because we are spending more time in terms of...
yeah, when you go eventually to 505(b)(2)s and all that stuff, that will be a couple of years away from now, that then the value will be much higher.
Okay, great. And secondly, just one, what would be the expected effective tax rate for FY21?
Hold it again.
Yeah, it is going to be the normal as we see. It will be around 24%.
Okay.
Thank you. The next question is from Rahul Garg from Shifa Family Office. Please go ahead.
Hello, sir. My question is regarding this 320 crore capex. Is that completely new capacity, or we have technology upgradation as well? And second question is about appointment of CEO, which you talked about earlier. Is that been fixed? And would you like to completely rule out the stake sale?
Okay, when it comes to the 320 crore capex, yes, these 3 were addition of the capacity. One in Vizag, JNPC Vizag, we added one more block, and then other one is the OEL4 capacity, which we added one more block in Pashmanagar, and formulation facility, there is a new formulation facility adjacent to the current one what we have. That is the 320 crores. There is a addition of the capacity. What is the other one? The next question.
Appointment of the CEO, the professional setup, which chairman has spoke about earlier, I guess.
Yeah, we are looking, but unfortunately due to this COVID, things have not panned out the way I thought of. But we have thought of somebody to bring in, but that's not happening as of now. But we are on the lookout.
Thank you. The next question is from Ranveer Singh from Sunidhi Securities. Please go ahead.
Yeah, thanks for taking my question. Sir, my question is around gross margin. Second half is likely to, see a change in product mix because I believe that chemical, specialty chemical would be heavier. So do you see any change in gross margin profile also going forward from what we have in H1?
Yes. If you really look at from the gross margin point of view, it is all based on the product mix what we have. And as we see the next 2 quarters, we need to see there is likely to be a change. It cannot be static as what we said.
Thank you. The next question is from the line of Varun Arora from Safe Enterprises. Please go ahead.
Hi, thanks for the opportunity. So my question is regarding the capabilities, where in terms of where we are moving. A couple of quarters back, I think you mentioned that right now we are focusing on N-2 molecules, but we have the capability and endeavor to, look into N-1 and even N molecules. So the question is regarding how is this evolving? How are the discussions evolving on this front with the customers?
Actually, it takes, last time also I said, it takes a while before you get to the next level. Even to change the existing product from one unit to other unit is also taking 2 years for the approvals. So we have requested our existing customers to keep us in mind to the forward integration and give us the opportunity, and which they are evaluating. I think it will happen and it will take time, but it will happen eventually.
Thank you. The next question is from Neha Agarwal from Sage One Investment. Please go ahead.
Thank you for the opportunity. So my question is with regards to the capex again. Could you highlight how many years of growth and maintenance requirement on an overall basis do you think the existing and proposed capex put together could take care of?
I think I want to give some explanation on the capex. People were maybe thinking the good olden days, the cost of the goods that is happening in the plants. When I started, I could do within 10 crores the whole company, then 10 crores for each block. Now to put a block itself is costing 120 to 150 crores. Things cost have gone up, the requirements have gone up, and all these things are. How many years it will run, and as far as the Suven is concerned, it's not a kiloliters and the capacities are not the one. This is the value addition we are bringing to the customer, which in turn will give the value addition on the bottom line. This is the crux of the capex. It is the upgradation, replacement, and value, some capacity creation, not a pure capacity basis. So please, everybody don't think that it's only for the capacity expansion. This is for the value creation. It's a qualitative in nature. And it will run, it will take 3 years to implement this activity. And it is also involved in the R&D center, which is mainly as a replacement also. It's not, it's the upgradations. So it will not give you capacity, but it will give you additional capabilities. It will bring it to the table. And that additional capabilities will bring the additional business opportunity with the value addition for the same thing, from the same customer or whatever it may be. So that's the way we look at it. We don't look at it pure capacity only and as a turnover. All these things are not feasible in Suven's business model.
Thank you. The next question is from the line of Akshay San from Asman Capital. Please go ahead.
Yeah. Hello.
Yes, sir.
Yes, sir. I just wanted to, because you said a lot of the capex will be utilized in upgrading technology, etc. I just wanted to understand what kind of capabilities will be able to acquire which we didn't have.
I have already clearly mentioned that we are evaluating various things. We are not finalized which one to be implemented first. We will be in collaboration with our customers' requirements and our customer preferences. We will be implementing those things. This is an in-principle approval for the upgradation capabilities and replacement things, which we have taken permission from the board to spend around 600 crores over the next 3 years.
Thank you. The next question is from the line of Charulata Gaidani from Dalal & Broacha. Please go ahead. Ms. Charulata Gaidani from Dalal & Broacha, you may go ahead with the question.
Yeah. My question relates to specialty chemicals. What proportion of the new capex and the 320 crores pertains to specialty? And what is the growth outlook for specialty?
When it comes to the 320 crores, of which 110 crores gone into the block which is multi-purpose in JNPC, of which we've been using specialty chemicals, most of them. That is how it is. As far as the growth is concerned, we said actually we have two right now, and that we did not give any visibility for this year's growth in specialty chemicals. 5 years we kept the same.
And the new things will be the new projects that are going to launch, one in 21 and one in hopefully in 22.
Thank you. The next question is from the line of Piyush Goyal, who's an individual investor. Please go ahead.
Hi, sir. So I invested in Suven first time in 2009. So this is my 11th year, and it has been a great journey so far. So I just want your honest answer that last year we did this split between life sciences and pharma. And I think the motive behind was that this is a different risk profile and where investors want to have a different risk profiles. So has it worked as you envisaged, or you feel it has not? And also, basis the risk profile, I know you said that you don't want to comment on the rumors, but do you intend to bring a institutional investor in any of these businesses?
So whether it has given the desired results or not, I think you will see for yourself. You are an 11-year-old investor, 11 years since invested, and you see what happened to me since March when the demerger has taken place and the valuation that has come to the customers. As far as the strategic investor or something is concerned, yes, I told you already that we are looking at for the Suven Life Sciences, and that is an active thing. If not strategic investor, we will go for even IPO in USA and in neurosciences and all, because now that has to be funded by itself. Earlier we used to fund through the CDMO revenue, so now it is a separate company, and now without that thing hanging out the head on the Suven Pharma, the valuations are different. And now with this new traction that is happening and the new upgradations and all these things, and the things are looking very good in the pharma also. This is what it is.
Thank you. The next question is from the line of Vainad B. as an individual investor. Please go ahead.
Hi, good afternoon, sir. Like Piyush, I am also an old-time investor, maybe around from 2012 onwards.
Thank you, sir.
And it's been a pleasure to be associated with you, not because of only your prudent approach actually satisfies me. With regard to this capex, we have answered a lot of questions, but I would like to know the same prudent approach which you have taken over a period of years with regard to it, with very, very little less of loans and more of internal accruals. Will the same be followed?
Yeah. Now that it doesn't have any other things which we need to use this pharma money. Before we used to use for the life sciences. Now that is gone, so we have to take some. See, some people come to me and saying that why you are using your own money, you should take some loans. I don't know what to take into the account. But anyway, we'll take some loans. As needed, but we will not be overburdened by it anyway. And as time goes by, we'll take a decision of what to do. Whether it is equity dilution for the QIP like what we did before, we'll take into consideration all those things. Whenever it is needed. When we have finalized our thought process of the new capex and all that stuff, I think which is in the next 3 to 6 months.
To make it simple, yes, we'll be as prudent as we were earlier.
Oh, that really satisfies me to keep going with your company for a very long time. And my last question, since I'm allowed only two, my last question would be like, this government has now introduced this some funding schemes for PLI schemes or whatever they call for the pharma industry to reduce raw material imports from China. And as much as I know, Suven was dependent on a couple of raw materials from China for their business, for our business. So is it that we can get into it to reduce the import costs and as well as supply customers, different customers internally as well as externally?
The PLI scheme is mainly APIs for the intermediates for the generic APIs, most of them, not for the intermediates or the raw materials we are sourcing for the innovative products. But I don't think Suven has a role to play in this unless you want to go into the API, pure generic API, and that too the price is controlled afterwards. And this is more of a talk rather than a walk, I can say, because finally it comes to 2 to 2.5%, and there are so many restrictions. And even though they are removing it, but this may be useful for those who are already there in this business of generic APIs, and that's for them. But since this is our innovative molecules and we are backward, there is a problem we're going to face with China. So those molecules that are required day in, day out. Those things we are trying to backward integrating and keeping it ready. It may not be for cost effectiveness, but it is a supply security. That's what we're going to do.
Thank you.
We're doing it.
Thank you very much, sir. I'll respect the two questions. Thank you.
Thank you.
Thank you very much. We'll take that as the last question. I would now like to hand the conference back to the management team for closing comments.
Thank you, and thank you everyone for tuning in on Saturday afternoon. And I want to leave the thought that whatever Suven does in terms of this capex plan, please do not take it as a pure capacity expansion, but we are a value creators, and for the value additions we need to upgrade our capabilities and capacities and as a part of it, but at the same time being a 30-plus-year-old company, the old infrastructure has to be replaced, and those things are the things, and also relocation of the R&D center with additional capabilities. All these things are qualitative in nature. They don't give you right away the incremental growth, but in general the things are, if you see quarter on quarter, even half year to half year also, you may not have a good idea, and this is in our history, and we will go into but we are seeing a very good traction in the business, and with the additional capabilities and capacities whatever we have created, we expect the things to go smoothly. And we have said even though it is 20% less for the 6 months, we are still confident of achieving the minimum of 15 to 20% over the next 6 months, over the year-on-year basis. And with that, I thank you each and everyone, and hope to catch up with you during the next call. Thank you.
Thank you very much. On behalf of Suven Pharmaceuticals, that concludes this call. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.